because all these buyers and sellers come together in a physical space. So whoever manages that physical space is the guy facilitating this. An exchange is like that. It sets up the physical space for buyers and sellers to get together. Of course, here is now a digital space. But so the nature of the service we provide may change. Like originally BSE used to provide a physical service, now the same BSE provides a digital service. But the service has not changed. The nature of the service has changed. The nature of delivery of the service has changed. But the service is still required.
We were talking about earlier that you mentioned that NSE used to run a private market, and in the US, a lot of the
Sorry, what private market?
Did NSE used to run a broker-dealer type of private market, like an alternate trading system?
No, never.
Okay. So anyway, in the US, there is ATS systems that are quite popular. You can get a broker-dealer license and run your own private market. Is that something that you think could happen in India?
So in India, it's not allowed by regulation. You cannot run a private market, what they call a dark pool, by regulation in India. In India, all transactions have to be declared, beyond a certain size, have to be taken through an exchange and declared.
Hi, my name is Divya. I'm a consultant with Deloitte's Risk and Financial Advisory. My question for you is, you spoke earlier about your...
Bringing your microphone.
My question for you is, you had mentioned earlier you were considering certain use cases with using smart contracts. Could you elaborate on that either for NSE or for any stock exchange?
So we have, so as NSE, we have experimented with, for instance, collateral movement on smart contract, which makes collateral movements a lot more efficient. Today, collateral movement requires a lot of back and forth and reconciliation and making sure that the person owns the collateral, making sure it is not double spent. So that is one experiment. We have in fact participated in, so in trade finance, we run a trade finance exchange in conjunction with SIDBI. So there, all the invoices that are sent to us for financing, how do we make sure that the invoice is not financed twice over or thrice over? So there we participate in a common blockchain across all the trade finance marketplaces. So every time we get an invoice, we submit it to the blockchain, and then the blockchain makes sure that the invoice is not double financed. These are the kinds of use cases that we have worked with, but production use case, actually only the trade finance use cases in production. The rest are all experimental.
How widely is the trade finance use case in production? Like how many parties?
So the trade finance exchanges are quite small at the moment. It's a very new initiative that was launched by the government, or was allowed by the government of India only a couple of years ago, and only 3 players have set up trade finance marketplaces. An exchange means an accredited invoice holder comes and says, I want this invoice to be discounted. And then banks can come and bid to discount that at, let's say, 8% or 7.5% or 7.9% or whatever. And then whichever is the best bid gets matched up, and the invoice gets funded automatically. That process is quite new in India, this whole exchange for bill discounting. The 3 players are still quite small, it's still evolving. We launched only about a year and a half ago, and it's a very new.
Just to latch on to that question.
We will come back to you. I just want your perspectives also on where you think blockchain and cryptocurrencies will make a major impact, and you as a CTO, where are you seeing integration potential for the new technologies to enhance the product offering that NSE has today?
So this is a bit tricky because, predicting disruptive innovation has always proved to be horribly inaccurate. People tend to underestimate disruption, either underestimate the effect or overestimate the effect. And so I'd rather stay away from it. We can tell you what we're experimenting in, but I don't think we are in a good position to predict what will really succeed.
Mr. Banerjee, if you've completed your answer, I'm sorry to interrupt, but just to latch on to the previous point, I think what you're referring to is the problem with double discounting of bills.
Right.
If you
Which is another version of the double spend problem.
Yeah. So my question is, you mentioned that right now you have like 3 or 4 banks that you have participated with.
No, not 3 or 4 banks. There are 3 marketplace exchanges
Okay.
for bill discounting.
Okay.
There are 3, exactly 3. 3 people have got licenses.
Okay. But for you to validate whether the invoices have been discounted, you have to have a more holistic view. What if it's been discounted with some other?
No. You're only allowed to put there are only 3 marketplaces allowed to do it. So the 3 of us have to coordinate. Of course, the blockchain can extend to anybody who wants to participate. But in India, only 3 entities are allowed to do bill discounting. Allowed to run a marketplace for bill discounting. Any bank is allowed to do bill discounting.
Yeah. So whatever trade is happening on that platform, you cannot get your invoice billed from anybody outside that platform. Is that correct?
No, not really.
But then how would you validate? What if the person got it billed or
we are not
discounted
the
by
person
somebody else?
validating. We are not the person validating. The bank that provides the loan wants to know that that same invoice is not being funded again, right?
Correct.
So in a blockchain, they can go and check themselves. We cannot check because I don't have access to the database of the other exchange. I put it on the blockchain saying this is the invoice that has been funded on this exchange. The bank can go and check, every person who has been requested for finance can go and check whether that invoice is already financed or not.
I see. Okay. Thank you.
That's the common view problem. So here we are giving the market a common view without having to explicitly share the database. You don't need to be under the same, same technology.
Yeah, I'll just add on. So basically the question is that what if I get discounted by another company that is not on this platform? And
that is the risk you take when discounting.
And then you check on the platform and see that there is nobody else who's been discounted or who has discounted the bill. So there's still a loophole, right? Unless and until you get the entire business on blockchain.
No. You must understand. The invoice discounting problem has plenty of loopholes. Right? It's not a question of loopholes. Every business takes a certain amount of risk. How do you know the invoice is genuine in the first place? Right? The bank who funds it takes a certain amount of risk in validating that invoice. It also takes a similar amount of homework to make sure that it is present only on the exchange. But there is no guarantee. It's not a question of loophole. Every technology allows you to make things easier and therefore reduces the risk, and therefore risk is directly corresponding to transaction cost. If you did not have this exchange, then you would have to make more validation attempts, right? More documentation has to be submitted, more paperwork has to be done. That adds to the cost of the transaction. Right. By coordinating between the exchanges, you are removing a fairly big chunk of that reconciliation. But you are not solving every problem on earth.
Yeah, I see. Thank you.
I wanted to rebound on one of your comments earlier about we're all together in this room today, but we are not a market. And the reason why we're not a market is because we're not interacting like market participants. And the reason why we're not doing so is because there's nobody who has instituted this market, who's providing a bidding-selling mechanism. When you study neoclassical economics, you get the illusion that markets are decentralized because they require no external outside intervention of the state or the government. But in fact, in the father of general equilibrium theory of French economist called Léon Barras, the central figure in this theory is the auctioneer. He's the person who's going to provide the bidding-selling mechanism. And without him, the whole structure collapses. So we're all doing very well at the moment with technology, blockchain technology, which is not the only technology around, artificial intelligence, quantum computing, you name it. But my comment and my question at the same time is, are we doing a good job from the institutional side of things? Okay, technology on the one hand, but we also need somebody who's going to institute the market, which is embryonic at the moment. So how are we doing in understanding the current institutional framework in India, okay, or the institutional framework of the future that will help blockchain technology thrive?
So, again, this is my personal opinion because this is it's a very fluid subject at the moment. There is a lot of regulatory fluidity. India is one of those countries that, because they've suffered a lot on scams in the past and is genuinely afraid of terrorism financing and money laundering, because they are, unlike in many other countries, in India it's a large-scale reality. So we are particularly careful about certain things. But at the same time, India, at least in the digital space, has proven to be very agile. Our banking system is some of the most digital in the world. I mean, US is actually a less digital banking system, noticeably less digital banking system. When I first moved to the US, I was surprised that it would take me, so Citibank told me it would take me 9 days to clear a check. And this is a Citibank check submitted to a Citibank account. So I was saying, are you sure it will take 9 days? Maybe you made some mistake in the paperwork. But that's how it used to be. And even today, this kind of instantaneous transfer we use in India is not common anywhere else in the world. Universal instantaneous transfer is not common anywhere else in the world. So in blockchain, similarly, I think India is doing this. It is encouraging a lot of debate and discussion, including the major regulatory authorities. They've set up workshops, they've set up white papers, they've set up panels, they've asked participants to try and experiment, they've offered regulatory sandboxes. There is a lot of activity in trying to figure out what the right way to go is. But at the same time, India is worried about certain things, especially money laundering, especially terrorism financing, cross-border flows. So there is also a strong element of don't do it if it disrupts too much. This balance, of course, we're not sure where the balance will end up. If we get the balance wrong, we'll end up substantially behind the world. If we get the balance right, we'll end up substantially ahead of the world without the consequences of mistaken experiments. But that's where we are, I think, at the moment. Institutionally speaking, that's where we are.
Hi, my name is Mukbil Ahmed. I represent Great Media Dynamics CIO. I have two very small questions for you. Of course, your presentation was very insightful, and I am of the opinion that PricewaterhouseCoopers is soon going out of business. And
no, I'm sorry, I shouldn't have said PricewaterhouseCoopers in particular. There's the big four, the Deloitte, Ernst & Young, and KPMG also.
Yes, yes. So, picking up that general tenor of your presentation about the decentralization feature of the blockchain technology, do you foresee a future where, highly centralized institutions, like for example the RBI or other such banking and financial institutions, would actually lose their hold, or would actually, not be there in the scene? Or maybe that is one of the reasons that a lot of bodies like the RBI, which are highly centralized in nature, generally have these kinds of knee-jerk reactions. For example, the statement which was out about a couple of months back that people should desist from using